Good morning. Welcome to our Monday morning real estate backstory. My name is Ming Richardson. I'm the compliance broker for Maximum One Realty and Realtor Partners.
And my name's Alan Richardson. I'm the managing broker here at Maximum Realtor and Realtor Partners. And we do want to celebrate Juneteenth today. It was 1865 on this day when basically, well, if you don't know
The history
of it, kind of thing. And so it was on this day when all slaves were emancipated, and so it was down in Galveston, Texas. And so today we celebrate them, we honor their memory, and we celebrate freedom for everyone. And so we're glad that you joined us today. We have some really cool stuff that we're going to be talking about today. In addition to, like I said, being Juneteenth this past weekend, we had Father's Day. Yeah, I know, I'm with you. But also, this is National Homeownership Month. As a matter of fact, there was a proclamation by the White House that basically proclaiming that it is National Homeownership Month. And it comes at a time in our industry when it can be kind of a tough, I'm not sure tough sell is the right word, but we need to be able to.
It's tough to obtain just because the fact that the market's changing with the rising interest rate, it makes home affordability a little more difficult for most people. So, but we do want to recognize the power of owning a home when raising a family.
Well, it is, and we see right now. So what you see here is that we're sharing kind of the consumer attitudes towards home buying and home selling conditions, and so we're seeing that the number of Americans who say it's a good time to buy is at some of its low. It's not at the lowest level, but it is at some of the lowest levels, especially some of the lowest levels since the last 12 years, 10, 11 years kind of thing. And so we know that overall, a lot of Americans are pessimistic about home buying. And that's a concern for us because like so much amazing things happen as a byproduct of home ownership. People live longer in their homes.
And you build wealth, and wealth is tied into home ownership.
Well, and I mean, in addition to that, we've got several points that we'd like to help you kind of make with your clients and be able to talk to people, because do we know that interest rates are higher? Yeah.
Absolutely.
Do we know that inventory is tight? Absolutely. What we don't want is that people just give up and say, I'll just stay a renter. It's not a great place. And so, first of all, rent increases are greater than inflation in most years. And so you can see that generally speaking, the rental rate appreciation is greater than the core inflation. And so even though we've seen a spike in inflation, what else have we seen a spike in? Rents. And so now that inflation is coming down, yes, rents are coming down as well. But that being said, generally speaking, rent increases are greater than inflation. So they're always going to be fighting. If you stay a renter, you're always fighting that. In addition, like when you own a home, these are kind of what are our predicted home price appreciations, through the next 3 or 4 years here, kind of thing. And so it's between 3-4%. And so we've seen where that is a very healthy number.
Well, and that holds true here in Atlanta market. While in other market, it may seem like it's actually below any inflation appreciation value, actually on depreciation, but in Atlanta market, once again, real estate's local is appreciating according to this rate.
Home values in Georgia have appreciated 54% in the last 3 years. Just last year alone, the average home in Georgia appreciated about $11,000. And so for homeowners, that's savings that they're not doing anything for in just by having a home. Their home is continuing to be worth more this year than it was last year. And so if it increases, the average is 4.5%, 4.4% for the last 50 years is what our average home price appreciation is in the United States.
Every year you delay in purchasing, that's much more appreciation of home value will be. And so if you compound that with the interest rate, it makes it very undoable. But at the same time, as we always preach before, marry the house and date the rate, because you can always refinance down the road.
Well, one of the other big issues is that homeowners have 40 times greater net worth than renters. And so the average homeowner right now has a net worth of $255,000. The average renter has an average net worth of $6,300.
Just exactly what they have in their bank. And that's it. No more, no less.
And so, when you're a homeowner, I can't say that if you're a homeowner, your net worth immediately becomes $255,000. But guess what? You're part of the group. Like you're in.
So yeah, the first few years, absolutely, you're not going to get $255,000 appreciation. But if you think about in spread of time and the years that you have paid rent and everything else versus mortgage, yes, your net worth is going to be up to 55.
So we need to be empathetic about especially for our first time buyers right now, what they're going through, the challenges of our market. But we also need to be able to talk about the power of home ownership, because in addition just to being home, National Home Ownership Month, it's good for our communities. It's good for people. They live longer. They have better relationships.
Well,
I mean, there's just so many good things.
It's
Better for
stability.
communities.
It's
Yeah.
stability. A lot of us are looking for stability at a time when, everything can change at a drop of a hat. So, and also when you quote the 255,000, explain to your client how that number is derived and what you're looking at on the longevity term is not immediate. It's not instant gratification. It is a long-term investment.
Yeah. Now, on the good news is that mortgage rates are continuing to come down. So we've seen them going down for several weeks now, and we really do look to continue to see mortgage rates coming down. And that's largely because mortgage rates are tied to the 10-year treasury, and the 10-year treasury is highly tied to inflation. And so right now we see the consumer price index as well as the producer price index. Those inflation numbers are dropping. And so we're really glad to see that, because as inflation drops, we are going to see interest rates continuing to drop, which is really what we need. And that's really going to help kind of push those things forward. But the interest rates are probably one of our biggest challenges right now. The other ones is inventory, but inflation is the thing that's burning us. And it's even affecting other things that you might not think about. So like this is a new report that just came out and says that the average US homeowners equity fell in the first quarter. And that's really not true. Okay. And so, because what they're talking about is the average home equity per borrower with a mortgage. And so like you and what's happened with interest rates, as interest rates have gone up, the average equity for borrowers, the average equity has gone down because interest rates have been so high. Dollar wise, the average equity in the United States is $274,000. That's the average equity. And so we're not talking like this is not a number that's gone down. Property values are continuing to appreciate. So how is equity going down? It's not. It's all depends on if you rate it based on homeowners with a mortgage, especially with the new mortgage rates that we've been averaging in. So, don't think that when you see something like this, that it's like, oh, things are really slowing down. Oh, this is hurting us. No, this is all tied to the same thing, to the interest rates. Now, our other big challenge that we have right now is in inventory. Right now, there are 40% fewer homes for sale than pre-pandemic. And we're continuing, like we've been steady making babies. We got more and more people, and we got less and less houses, almost half. I mean, we got 40% less houses we have now than we had in 2020. And so we still have a lot of people looking, and the inventory is probably one of our, inventory and rates. Those are the two big factors for us right now.
But I also understand buyers are being more selective, because at the end of the day, the monthly payment has to be the same. So they're being a little more particular about what they want. And so sellers, please be aware. Agents, if you're a listing agent, please have a good consultation with your seller on expectations.
Well, and then this kind of shows the graph. You can see what our new listings of homes are. We're 23% under last year on the number of new listings coming on the market. In addition to being under that, these are our total active listings on the market. So we are well under anywhere that we've been for a long time. Like our active listings, our new listings, we don't have a new listing, enough new
Enough.
listings. Now, one place where we are starting to see a little bit of a light at the end of the tunnel here is on new home sales. When you look at new home sales, it's a percentage of home sales that's been trending up since 2010, really. I mean, and so we had a bigger jump, pre-pandemic, but then the pandemic kind of affected housing, but we're actually, if you look at the trend line, we're actually moving back to where we really need to be. And so, excuse me, new home sales as a percentage is a really big deal. And you can see it as when it comes to as a percentage of total inventory, 30% of our inventory right now is new homes. So that's a
large percentage.
I mean, we're
because
getting almost a third.
Right, on the average in the past is no more than 15%. So it's actually double in new home construction sale.
Well, but that's because there's so few resales out
That's
there.
correct.
And so if you're really going to be representing your clients well, do you need to be well versed on what builders have inventory? Where is standing inventory? What kind of promotions and specials are the builders running? Do you have to use the builder contracts? Yes. I'm sorry. Like we have to use the builder contracts. Well, what do you have to do in order to secure the best deals? Are you going to have to use the builder's lender? Almost always you do. You're going to have to use their closing attorney in a lot of cases, and sometimes if you're not used to working in the new home sales environment, this can come and I'm not saying it's always right. I don't really like how it always works, but you need to be very comfortable with that and understand and be able to explain that to your client, because it can hurt them.
Well, at the end of the day, it is your client's money. So what you want to do is allow them get the information they need and make the best informed decision.
Yeah. But if you don't feel comfortable with new construction, get classes, talk to us, talk to your brokers. Like being competent in new home sales is like really when a third of our available inventory is new construction. Do you have to be competent in new construction? The answer is absolutely, unequivocally yes.
Yes, all the time.
Yep. So now one other thing that we're seeing is because of the tight inventory, what are our buyers doing? They are looking outside of areas. And so you can see that even here in the South, they're looking out more. Now, other regions are looking outside the area, but folks are looking outside of their region. Yeah, outside of city areas. They're willing to go where they can afford a home. And so a couple of points here. One is, especially here in Georgia, we get a lot of people from out of state because even though we might be, these prices are rough. Like if you're coming from New York or California, like this is gravy, baby.
Yeah.
And so, but at the same time, so being, having referral networks set up, having referral partnerships is really important. And then the same thing, even local, we're seeing where folks are moving outside the city, going more rural, going more small town. So either be ready to work, expand your trade areas out a little bit more, or again, you need to set up those same referral networks out and in. So looking at that is a really important piece for us kind of moving forward.
Absolutely.
Now, overall pending sales are down about 17%. We're seeing that number, but actually that number has been improving based on an overall percentage. A third of our pending sales are still under contract within 2 weeks. So that's a pretty significant number.
So it's about the inventory condition and also pricing.
Yeah.
Those are the two major influencers.
And also a third of homes are still sold above list price. Now, I don't want it to, what we are seeing is we are seeing some sellers that are coming out and saying, well, I can do whatever I want. That's not the case. No, I mean, like
and y'all, when you have such a good contract, and if it's over repair, less than 2,003 even, make it work, y'all, because I'm telling you right now that we had one contract that terminated recently over 1,200. And so if you look at the mortgage, if the seller has to pay the mortgage again in a month, that's more than 1,200. So, evaluate what the buyer's asking for, because they are now being a little more choosy as far as what they want, and rightfully so because the interest rate. But just make sure that you're looking out both side equation.
Well, we're also seeing where price is really a big deal. We just had, we have a very recent seller that is super bummed because they only have one offer. Now it's a full price offer, but they're like, only one. Well, you know what? You only need one. And so
That's right.
it is still a different market out there than we've had in the past. Like really good priced homes in really good areas in really good condition. Guess what? They're selling really fast.
Correct.
And so we have a lot of sellers who are trying to push things a little bit, sometimes a little bit too far, and that's biting those folks on the derriere, as it would be. Now, rents at the same time are posting their largest drop since 2020, and this is not market driven. This is supply driven. What we're seeing is that the rental completions has been just astronomical since 2011. Like the number of apartment complexes being built has just been staggering. And all of a sudden they reached the point of inflection, and now they have stopped building. Like they're going to complete what's out there, but the new permits coming out has absolutely dropped to literally nothing
that's
right now.
because right now, as a builder, it doesn't make sense build all these multi-family unit when you don't have demand for it. So for them, that's part of the reason why, and the market is shifting.
Well, but we also don't need to think that rental rates are dropping because of market conditions. Like it's not that suddenly we don't have folks that want to buy and want to rent.
Still have people want to rent,
Yeah, that's not it at all. Now coming up later this year, on
August.
Yes, yeah. On August 22nd, 23rd, and 24th, we will be live streaming the Tom Ferry Success Summit in our offices. And so this is a really big deal. We love doing this. We do this every year. I think we've done 7, 8 years we've been doing this now.
7 years.
Yeah, I mean, for quite a while. And every year there's some really great nuggets of information.
Not only that, it makes me happy to see some success. Agents that may not be ours have started their own brokerage, along with the feedback, the knowledge, the learning, the mentorship out of this. So it's a great event. I highly encourage y'all to come.
And we try and do our best to kind of go over the top. We have folks come in, we provide breakfast and lunch during those events. We try and we try to make it so like you're sitting there in the crowd the same way you would be if you actually went to the event. So when they jump up and go, we jump up and go the same kind of way.
Well, this year we're actually going to open our Carrollton office to do the event. So kudos to Jan and Laura for MC the event for me.
Yeah, very good. All right, as far as training this week, so tomorrow, my lovely bride, she'll be teaching 2023 GAR brokerage agreements and other forms, long name, over in our Conyers office.
And it's basically going to go over the changes that was made mid-year. So come by and look at it, because there's slight changes sometimes that make a difference on how you write a contract.
On Wednesday, I'm teaching making money with real estate investing. I'm going to be over in our Noonan office doing that. So please come join me if you want to work with investors, or you want to be an investor, which you absolutely should be investors. Then join me on that. And then on Thursday, we have remodels, rehabs, and new construction, how not to get ripped off. And so that's going to be over in our Fayetteville office. So we hope that you guys have a great week. If we can be of any service to you, please let me know.
What happened to the text smoke?
Oh yeah.
Oh yeah.
Call, text, smoke signals. We answer it all. That
Thank you. All have a great Monday.
Right. Thanks.
Stay